It's finally happened. With the Fed's decision to cut rates, the final barrier that was holding back the crypto market, and on a deeper level, the credit cycle, has finally been broken. And while most people on X are screaming that the cycle's already topped, or we're going way lower, or the rate cuts are a sell the news event, I'm here to tell you why, in my opinion, all those people are completely wrong. We're not even close to the top this cycle, and in my opinion, we're just getting started. By the way, a little bit later in this video, I am going to be talking about the 7 tokens that I'm trying to take from $10,000 all the way to $1 million, and just do a quick update on them and what's happened post the rate cut. Over the last few weeks, there have been a ridiculous amount of people on X claiming that this cycle is over, we've already topped, and we're going way lower. With some people calling for Bitcoin going all the way down to 90,000, quite a few people saying that the cycle had already topped, it was over, and they were selling everything and getting out of crypto. And just overall, a lot of people seeming to throw in the towel that, this cycle was done. And if people weren't calling for the cycle top and saying it was over, they were saying that it's going to be over really soon. A lot of people seem to really believe or basically everyone seems to really believe that the cycle is going to end in October or November, and that after that, it's going to be over. But as you guys know, that has not been my belief. In fact, all the way back in July, I was talking about the sell-off that would come in August and September, because August and September are seasonally bearish. But not only that, we also have the TGA rebuild happening right now, which is a liquidity negative event. It basically means markets really struggle when this is ongoing. And so all the way back in July, I talked about how this would be happening. A lot of people would be saying it was over, that it was done, it was time to sell, but that obviously it would not be time to sell, because it's going to turn around, in my opinion, starting in October. At least that was my opinion back in July when I made that content and talked about all this. And the big pivot point, the big headline event that I kind of tied everything to, was the rate cut in September. September was the first point where we had real odds of seeing a rate cut by the Fed. And yesterday, that is exactly what happened. The Fed, for the first time since last year, if you guys remember, we had the yen carry trade unwind that happened in September of last year, where the Fed cut 50 basis points. And it was actually really bearish for the market, because people were really worried that the Fed saw something in the economy that we didn't see. And so we had this sort of like bearish price action from September into about halfway through October. And then the bullish momentum started peaking up. Trump won the election. Then things went absolutely bananas in November. And really the reason that we did that is because people thought we'd kicked off the start of a rate cutting cycle when the Fed cut in September. And so to have the Fed kind of flip a U in December and say, actually, we're not kicking off the rate cutting cycle, in fact, we're not cutting rates at all anymore, was like this big rug pull for the entire market that caused that major sell-off that kind of flowed into the tariff madness sell-off of April. So basically, from September of last year, we have been on pause from rate cuts, where the rate cutting cycle has not really begun. It was like this one-off. And now we have finally resumed the rate cutting cycle, with the Fed cutting rates for the first time since then, 25 basis points. And there's a really good reason people are optimistic when the Fed starts the rate cutting cycle. And that's because the rate cutting cycle kicks off the credit cycle, which is one of the most powerful forces when it comes to pushing asset prices higher on the face of the planet. And we're going to get into that in just a second, but I want to go through exactly what happened with this rate cut. So the Fed cut rates by 25 basis points. We also got this thing called the dot plot, which is really, really important and not something they do at every Fed meeting, which it shows how many rate cuts they expect for the rest of the year. And this was the only thing that kind of had me a little bit nervous about this Fed meeting, where I thought it could flip bearish, is the market was pricing in 3 rate cuts for 2025. But if the Fed came in lower than that, I was actually concerned that that could be actually perceived to be extremely bearish for this rate cut. But luckily, what ended up happening is the Fed also projected 3 rate cuts total for 2025, meaning we're going to get 1 rate cut that we just got, and then likely another rate cut in October and another rate cut in December. This is extremely bullish, because this goes from a one-off rate cut to kicking off the rate cutting cycle. And why this is really exciting for me is this does 2 things. For one, it weakens the dollar, which is extremely bullish for risk assets because it makes global liquidity go up. And 2, it kicks off the credit cycle, which is extremely bullish for assets and makes global liquidity also go up. And there's basically 4 stages to the credit cycle. And I'm actually going to start the credit cycle at point 3 going to 0.4 and then 1 and 2 to kind of show you where we've been and where we're going. So what we've gone through is in 2021, we had this really amazing credit cycle where credit was really cheap. People were buying a ton of houses. They were taking about a bunch of loans for their businesses. And you really saw global liquidity just absolutely skyrocket. And you saw the business cycle skyrocket, asset prices were skyrocket, and everyone was making a ton of money. It was amazing. And then in 2022, what we saw is the phase 3 of the credit cycle, the tightening phase, where central banks started raising rates. And this was the fastest rate hiking cycle in the last 40 years. It was just unprecedented, absolutely insane. And then after stage 3, stage 4, and like I said, I'm going to talk about stage 1 and 2 in just a second, which is credit crisis. And this is what we saw kind of towards the end of 2022, where we saw Terra Luna collapse, we saw FTX collapse, we saw all these crypto companies and funds unwind and collapse. This is where you have a severe contraction of credit, defaults, bankruptcies, or even bank failures. We actually saw those bank failures, if you guys remember, in 2023 with Silicon Valley Bank and the whole banking crisis where the Fed had to step in. Asset prices crash, unemployment rises, GDP shrinks. Interestingly, we're not seeing asset prices crash, but we're actually seeing asset prices at all-time highs, which I'll get into that a little bit later in this video as to why we're seeing that. But in general, we've been in this stage 4 of the credit cycle since that 2022 rate hike. Or I guess you could probably say we've been between stage 4 and stage 1 since 2022, because it hasn't been exactly stage 4. Certainly we were there at one point, but it's kind of been in this weird in-between zone. But with the Fed starting the rate hiking cycle again, that means we're headed back towards credit expansion. That's when banks lend freely, interest rates are low, and credit is cheap. Borrowers take on more debt, asset prices, real estate, stocks, Bitcoin, etc. inflate, and investors chase yield. And then after phase 1 is phase 2, credit euphoria, lending is still easy, but debt levels are very high, signs of speculation, overconfidence, markets hit new all-time highs, but fundamentals may weaken, interest rates may start rising, and central banks begin tightening because typically inflation gets out of control, and then it starts the entire cycle over and over again. Now, alongside the credit cycle, equally as important is dollar strength. Because when dollar strength goes up, that's actually really bad for global liquidity and asset prices. And when dollar strength goes down, that's actually extremely bullish for liquidity and asset prices because it allows other countries to stimulate more and do more risky things with their financial systems. And as you can see, we actually peaked in terms of dollar strength in January 2025. And actually, a big part of this move kind of coincided with the Fed saying they were going to pause rate cuts. However, since that peak in January, of 110, we have declined quite a bit. Actually, a really big move for dollar strength, all the way down to a low, which we actually put in yesterday when they did the first rate cut, of $96. And you don't really have to be a genius to kind of see that this is putting in lower highs and lower lows, and it seems to be on a pretty solid downtrend. If you guys remember my thesis from before, it was that when Trump came into office his first term, we saw a massive decline in dollar strength as he really likes a weak dollar because he prefers it because it's really good for American exports. And we've basically seen this exact same pattern playing out this term with Trump, as the dollar has significantly weakened since he's come into office. So we have the Fed finally cutting rates and pricing in 2 more rate cuts this year. We have dollar strength in decline and showing a clear downtrend. We have the credit cycle kicking into phase 1, which is when credit expansion happens, when people take out more loans, more money creation happens, and global liquidity momentum starts picking up. You have all these things that are extremely pro-liquidity, that are extremely bullish risk assets, all coinciding and happening at the same time. It is absolutely unhinged, absurd to bet that the market is going to go down in that environment. That is like the perfect recipe for the market to go up. Like if you're baking a cake, that's what produces the cake, okay? You don't put together those ingredients and expect to get a fish, which is basically what everyone's saying. Everyone's saying like, oh my gosh, all this stuff is gonna mean that the markets go down. And it's like, that absolutely makes no sense. Markets don't want to go down. Like there's this weird misconception because you look at a chart and like your human brain's thinking like gravity, right? So you're thinking like it's easier for it to go down because, you know, in the normal world, if you throw something up, it's easier for it to go down because of gravity. Charts don't work like that. They can just as easily go up or down. And they historically actually tend to go up, not down. And I know I've shown this chart a couple times, but I want to show it again to really drill home the point. Bullish years for crypto assets and for alts have perfectly aligned with extremely bullish macro environments. And on this chart, yellow is neutral, green is good, purple is really good, and ivory is like maxed out. And you can see in 2013, things were really good. Things were feeling pretty dang bullish when it came to macro and risk assets. When it came to 2017, macro was looking fantastic, absolutely fantastic. Like it was fully supportive of risk assets moving higher. When you look at 2021, it was unhinged fantastic, like unbelievably fantastic for risk assets. And if you listen to most people on X or talking on podcasts, etc., they'll tell you the reasons those years were bullish for crypto has to do with the halving. The halving is what pushes Bitcoin's price higher. Every 4 years, you have the emissions for Bitcoin get cut in half. So the amount that's paid to those who mine Bitcoin, those who secure the network, gets cut in half. And so their whole argument is it's supply and demand. Now you have less supply coming into the market. And so you have a price correction of the asset to the upside because you still have the same amount of buying pressure. And this is something that I actually believed for a long time that this was the cause of the 4-year cycle. That was until the Ethereum merge happened. Bitcoin's having it's cutting the supply in half. Ethereum's merge effectively cut the emissions from Ethereum by over 100% because it flipped into deflationary territory. And everything we're told is that when something like that happens, supply and demand, you're cutting the amount of new supply coming into the market. You have the same sustained demand. You're going to see that asset price pop. Yet with Ethereum effectively having this mega halving with the merge, you didn't see anything like that. In fact, Ethereum ended up being like one of the worst performing assets for like the next couple of years, despite having that catalyst that everyone else tells you is extremely bullish. This is what caused me to get into all this stuff in the first place. Is I'm like, okay, if it's not the halving, then what is causing these insane bull runs? And it just so happens when you look under the hood that you have these insanely bullish environments that just happen to line up every 4 years. As I pointed out, this actually makes a lot of sense because the thing that caused Bitcoin to get created was the 2008 financial crisis. And that's also what prompted a ton of policy response by regulators all over the world that effectively put in place the pattern that we saw happen every 4 years. So it's not really that weird that those two things ended up lining up the way that they did. And as I pointed out in the past, if you look at 2022, you can see why 2022 was such a horrible year for crypto. 2023 was an okay year for crypto, and you can see that here in the narrative category. 2024 was also a really good year for crypto, and you can see that as well in the narrative category, but also market structure improved. And 2025 has been pretty dang good as well, and you can see that as well in market structure, a lot of things being neutral in the narrative category. But as you can see, 2025 doesn't look anything like 2013, 2017, and 2021. And that's because the policy response from COVID created a brand new pattern, which is the pattern we're currently playing out. I had been calling for 2 cuts in 2025 and 4 cuts in 2026 for a total of 6 cuts. And what the market has now priced in is a total of 6 cuts, but it's a little bit different. 3 cuts in 2025 and 3 cuts in 2026. And pricing that in, you can see this is what 2026 would look like on a macro front if we were to get those cuts, which is a much more bullish picture than what we're seeing today in 2025. And it looks really similar to 2017. It's like between 2017 and 2021 in terms of like magnitude. And I've also talked a lot about the ESLR and highlighted that if we got these cuts plus the ESLR, which that's supposed to come into play late this year and early next year, somewhere in there, this is what the picture would look like. It actually look on par with something like 2021, if not possibly better, because this narrative function and market structure function are so powerful right now, given the ETF, institutional adoption, and all the crazy stuff, the regulatory clarity that's happening in the crypto space. This is why I'm saying the top is not in. It's not even close to being in, because I'm betting on macro. I'm not betting on some stupid 300 days from the halving and it's going to do this. That's like voodoo magic nonsense. Okay, like you literally don't even know what you're talking about if you're saying that. You're just like saying, oh, this happened in the past without even the context of why it happened. It's like if you had this person like watching your driveway for some reason, kind of creepy, but they're watching your driveway and they note that that your car leaves the driveway every morning at 6 a.m. And so therefore they assume that when the clock turns 6 a.m., that causes the car to leave the driveway. And they're basing this entire theory off of having seen this happen 3 times. However, when Saturday rolls around and it's 6 a.m. and the car doesn't move, they're utterly shocked because they're like, why did 6 a.m. not move the car? They've never thought deeper as to why the car actually moves at 6 a.m. because, so-and-so has to go to work. And had they thought deeper on that level, they would have realized on Saturday the car wasn't going to move. This is what I'm talking about. Everyone's thinking, oh my gosh, these amount of days, this has happened 3 times, so it's going to play out this way. But they're not thinking why it's happened each time. They're not like thinking on a deeper level, oh, this is why it's happened. And if they knew that, if they thought through why it happened, they would know it's Saturday. And they would know that the pattern has shifted, it's changed, and things are not going to play out like they have in the past. And I mentioned that in this phase in the credit cycle, typically stocks are like in the dumps. But right now we have this weird situation where real estate's at all-time highs, crypto's at all-time highs, stocks are at all-time highs, gold's at all-time highs, And so people are kind of like, this is weird. Why are we cutting into this? It doesn't make any sense. And I highlighted on an X that a lot of people are actually missing the bigger picture as to why we're in the current situation we're in. And that, as the saying goes, history rarely repeats, but it often rhymes. And the reason I highlighted that we're seeing things the way they are is right now we have a few mega caps that are dragging indices to record highs, but your average stock is doing okay. So you have these AI like build out companies that are really making up the majority of the gains in the stock market. And that what maybe some people are missing is that we have cooling jobs, credit card and auto delinquencies are climbing. Housing affordability is stretched and manufacturing is in contraction. I pointed out a lot of times that the ISM is sitting in contraction territory, which is not typical of a cycle top. Typically, it's in expansion territory. And when I say typically, always it's in expansion territory. It's not sitting down in contraction territory, which is very abnormal. And for this one, all you got to do is like look around, like go talk to your neighbor, go talk to your friends. Like, are people like just balling right now? Or are they like, is everyone feeling rich? Or does everyone feel like they're kind of struggling? Okay, so you kind of have this tale of two cities when it comes to the economy, where yeah, all this AI build out and stuff is making it seem like, oh, everything's doing really great. But under the surface, it's really not doing that great. And I go on, usually at stock market all-time highs, the economy is booming, but right now it's not. Stocks are at highs because of AI mania, mega cap concentration, and more people turning to assets to protect themselves from dollar debasement. I think this one's a really big one. People kind of have woken up to the fact that inflation exists. And I think you're seeing this more of an allocation into assets as more people realize they have to allocate into assets or else they're going to watch their average dollar in their bank account get debased. And so I think some of this is also what's pushing up stocks to all-time highs is you're seeing a lot of people just put more money into the S&P 500 or whatever to try to protect themselves from debasement. And it's just kind of creating this perpetual bid for assets that really is a little bit of a disconnect from the typical mania you might see when stocks are at all-time highs. And then when it comes to crypto specifically, crypto is an all-time high because ETFs and the narrative flipping insanely bullish due to institutional adoption and growing regulatory clarity. So this is a story of market structure and narrative that's pushing crypto to all-time highs. And I don't think if you had that, I think crypto would be sitting in the dumps right now. I think people would be calling it mega dead at this point. Basically, all that to highlight that, yeah, stocks are all-time highs, but you have to look at why stocks are all-time highs. And if you look at that picture, you see that actually it warrants, the economy warrants cuts. And as I pointed out in the past, I really like this post, and so I want to highlight it. As I pointed out in the past, the reason you see the crypto market collapse is usually it's a huge deleveraging event. Because we ran up so high so quick, you have a lot of froth in the market, a lot of just kind of unhealthy activity in the market. And so it's like a Jenga tower, this analogy I always use, where you've taken all the pieces out and made it really big, but one wrong push and the whole thing comes crashing down. That's typically why you see these huge bear markets after a crypto run-up. The thing about this cycle is it's been completely different. This has been structural demand due to ETFs that has been completely different than what we've seen in the past. Meaning right now the market's in actually a pretty healthy state. And it's not looking like it's not like the Jenga tower is super wobbly. If anything, like almost no pieces are missing, and they've made this structurally more sound due to this constant bid from this ETF flow. And currently crypto has the literally most insane bullish catalyst I've ever existed for crypto. On top of the Clarity Act, the Bitcoin ETFs, which will continue to grow year over year, altcoin ETFs, which are coming starting in October. But then yesterday, we got this absolute bombshell piece of news, which was the SEC approves a generic listing standards for ETFs, paving the way for digital asset listings without explicit approval. Basically meaning they're going to have like a generic framework that, like, if you meet this framework when you want to list an ETF, you get to list your ETF, meaning any altcoin that meets that framework gets to list their ETF. And this is what I've been talking about for the past couple of months. I was saying it was very likely we're going to see something like a Dogecoin ETF, XRP ETF. And, once you have a Dogecoin ETF, like, literally that opens the door to like 99% of altcoins being able to get an ETF. And actually, we just saw the Dogecoin ETF go live. Yesterday, I believe, is when it went live. But, whatever. If the SEC approves a meme coin ETF, that opens the door for every single token that can sustain demand. That somebody's like, hey, maybe this ETF will do good. It's going to get an ETF, and it's going to happen a lot quicker now that we have these generic listing standards. And if you just think through the second and third order effects of this, it's like ridiculously bullish. For one, it's like a huge bat signal to all of retail, like, hey, these things are investable, like normal assets you can put money into. It imbues massive amounts of legitimacy to altcoins as a whole. But for two, you're just going to see a ton of speculation. Like all you need is one of these ETFs to do like somewhat decently well. Bitcoin and ETH have just crushed it. Okay, one altcoin ETF Outside of that, doing ridiculously well is going to cause a mania of like, let's get as many of these things listed as we can. Now it has all access to all this boomer money that can go into these altcoins. Altcoins are so small. They're like, Bitcoin's a multi-trillion-dollar asset, and these ETFs are moving it up. If you got like 1/10 of the flows into any of these altcoins, the amount that altcoin would go up is absurd. Like, it's unhinged absurd how much that would impact that altcoin. And so one of them doing well, if you guys have been around the market for any amount of time, one of them doing well, you know this, will cause a whole slew of them to get launched as everyone searches for the next one to do well. And it causes this huge mania rotation downward on the stack. And that is a huge catalyst for Altseason and a huge catalyst for crypto as a whole. So looking at the entire picture altogether, it is unhinged, insane. But like, this isn't even everything. Like, I have to do so many videos on this. I do so many videos, updates on this, every week. And every week I'm talking about a new thing that's just insanely bullish. It's like too much bullish stuff for me to fit in a video. My videos keep getting longer and longer and longer because there's just too much stuff to talk about, because it's like the most insane bullish setup of all time. It's just not bullish if you think the cycle is ending in like 30 days or whatever. But if you look at the macro picture and like, okay, yeah, this is clearly going into 2026, then you start to get really hyped up as like, wow, like this is going to be insane. This is actually going to be possibly the greatest alt season of all time, depending on how things play out. And really quick, I wanted to do a brief update on the 7 tokens that I talked about on Monday. There's a lot of people asking how you buy these tokens. And I always forget to mention it in the videos, but I put links in the description of the video. So I'll put links to how to buy all those tokens in the description of this video. If you haven't went and watched that video, it was my month 2 update of I'm trying to take $10,000 and turn it into $1 million using 7 different really tiny asymmetric bets in specific altcoins. And just FYI, because these altcoins have been doing really, really good, I actually I did not expect them to do as good as they are doing right now. It seems like right now people have a little bit more of an appetite for alts than maybe I anticipated when I made that video. Like, for example, with Avo, like I literally thought it'd maybe go from 3 million to like 3.8 million, 3.9 million. I did not expect it to go from 3 million to 25 million in market cap. That's crazy. It was actually too fast. As I mentioned in my original video, I have a lot of money, around 100K on the sidelines, that I meant to use to buy more of the Avo supply, because I wanted to actually own a decent chunk of it, because I'm really insanely bullish on what Avo's building going into alt season. But the catalyst there is alt season. It's those macro conditions flipping green, like I showed on that chart. It's everything coming into place and retail showing up. It's not actually even most of the people listening here that I'm expecting to like push this token to, $1 billion, $5 billion. I expect when retail comes in. If you guys remember last cycle, retail with it was like 1,000x what we're seeing right now. Okay, like my videos were getting absurd amounts of views. It was like 200,000 views a video, 300,000 views. Some videos were getting 1 million views a video. The appetite for alts was crazy. Back then, you were seeing tokens at 100 million market cap just like skyrocket to 1 billion. Like the amount of participants and money flowing around pushing asset prices higher was absurd. And that's what I'm expecting to come back into the market this cycle when alt season begins. So keep in mind, that's where I'm anticipating. Some of you guys are like way too impatient. Like I get messages like, Avo went to 25 million or whatever, or 27 million, I guess. It went even higher. And now it's dipped back down to a low of around 13 million. And people are freaking out. They're like, oh my gosh, like, I can't believe this is happening. And for me, I'm like, this is great. Like, price doesn't go up in a straight line. If it did that, that'd be terrifying, because that means like you have distribution. You got to have people selling and like more holders and distribution among holders. You don't want it to go up only, because then you have like some whale just like giga nuke the price, and then like the odds of you getting back up there is just absurd. So you want to see strength build in price by like going up and then coming down and being challenged, and then going up and then coming down and being challenged. That's a healthy price action. I've actually been hoping that the price would come down to, I don't know, like a lot lower than this. I want to buy more Avo because, again, I don't care about all the people buying right now. I literally don't care about. Right now, the market's just full of the same people it's been full of the entire time, and they just keep rotating around to different tokens. I'm pumped when the space gets flooded with retail, when the participants in the market buying and the capital in the market and the buying just exponentially goes up. Those are the buyers. Those are the people that I'm looking to buy my bags. And if the market gives me an opportunity to buy Avo back at 3 million or whatever, I would love that. I would be so pumped if I got that opportunity, because again, I like these people, I don't care. I don't care if they're rotating in and out. Like, that doesn't bother me. It's retail that I believe will take this thing to its maximum potential. I think if you were to throw this token into 2021 and you're like, boom, okay, this token now exists in 2021, I think it'd be at multiple billions in market cap. Like, that's not investment advice. That's just my opinion, but that's a genuine belief. And that's why I'm throwing some money into this token is because I believe that. And, I get to test that belief. And if I'm wrong, I lose money. If I'm right, I get to make a fortune because I took the risk when nobody else was willing to take it. But looking across kind of all these tokens, so you have Virus, it's kind of selling off a tiny bit right now. You have SFG, it's kind of continuing its little trend up, which that's good. You have Winner, it's kind of going sideways. You have Una, that it's kind of staying up, which that's good. You have Hannah, which is actually not part of my 7, but it is one I talked about, I think a week ago or whatever, that's actually done really good. It's about tripled in price. You have RSC that seems to be on this uptrend right here. You have Geode, which is finally breaking out and on an uptrend. And if you look at the past year, only 14% of altcoins have outperformed Bitcoin. Over the past 30 days, 48% have outperformed Bitcoin. Over the past 50% have outperformed Bitcoin. But over the last 24 hours, 67% have outperformed Bitcoin. And that was out of the top 1,000 tokens. This is out of the top 100. You can see right now, 77 of the top 100 are currently outperforming Bitcoin over the last 90 days, which I think all of this is a very, very early sign that we are starting to see some strength in alts, that you are starting to see some of these things that I've been talking about start to take place, that the final barrier has been broken and people are starting to realize that. And if you guys remember a video like a week ago or whatever, I was talking about how I actually think, I flipped my opinion. I actually think that September is going to end likely in the green because everyone had flipped so bearish that it kind of felt like some of that bearishness had got pulled forward. And just given the catalyst and the fact that we made it through some of those big headline events like CPI, PPI, with them being either neutral or bullish, I was of the opinion that it was very likely that, maybe this is going to be one of the rare Septembers we end in the green. And barring some sort of insane headline event for like a world geopolitical conflict or something like that, that has actually currently become my base case, that actually September is likely going to be just a slow grind higher before October really takes over and we end up kicking things into overdrive. By the way, with all these tokens, I have not sold a single token. I'm only buying, I'm only holding for the reasons I just laid out. And really quick, the Obsidian Council is my private community where I share updates every time I buy or sell. I share my entire portfolio. I do weekly video market updates on the current state of the markets, these projects, everything in between, and a ton more. Currently, the Obsidian Council is closed to new members, but I'm opening it back up on October 7th at 11 a.m. Eastern Time. If you're interested in signing up, join the waitlist in the description of this video, and I'll be sending an email on October 7th when I open it back up. As always, none of this was investment advice. None of this was me telling you to buy any of these tokens or do anything with your money. I'm obviously not your financial advisor, and you should always do your own research. If this video is helpful, make sure to hit that like button. And if you want to see more videos like this, make sure to hit that subscribe button and the little bell next to it to be notified each time I release a new video. Thanks for watching, and I'll see you next week.